Hi everybody, warm welcome to you for this third customer success session of today. My name is Herbert Blankenstein and I'm looking for the little box here. Yes, I'm a journalist and I work for BNR News Radio, a Dutch commercial news station. I have, for the next 30 or so minutes, I have two disruptors for you and I'll call them on the stage right now. It's Dave Dart from Can Capital, and Glenn, yes, big hand please, and Glenn Sanford from eXp Realty. Hi.
Hi.
Welcome to you too. Please sit down.
Thank you.
And I'd like to offer you some water. Maybe we can have an extra glass. Clean glasses.
Please.
Maybe somebody's coming up, otherwise we'll do without. It's just half an hour. Let's talk about your companies first, your disruptors. Glenn, please tell us about eXp Realty. What do you do?
So we are a residential real estate brokerage operating in the United States and into Canada. We actually are totally cloud-based, meaning that we don't have any physical bricks and mortar offices. Back in 2008, after the market downturned, I had 3 physical offices at that point. I come from a technology background. I built an online service in Canada back in the 90s. So this idea of collaboration and community online was something that was sort of near and dear to me. And in 2009, after the market downturn in the US, which was quite significant, as most of you probably are aware, we decided to build a real estate brokerage that didn't require bricks and mortar. And so we really went about reinventing the compensation model for our agents and brokers. And that's taken off, and we're now in 40 states, and we're up into Canada. We've got 1,300 agents. We'll double again this next year. So that was kind of the model in a nutshell. But all of our agents are shareholders in our company. We share revenue with the agents and brokers who help us grow, and that's created a big viral growth in the real estate model. Because agents, generally speaking, only get paid if they sell real estate, and we've created additional streams of income and additional ways to get paid in the real estate space, which has actually put us on the map with a lot of the bigger competitors. They're starting to say bad things about us, which we're really happy about, and so as a result, we know we're doing something right.
Okay, that leaves a couple of questions. How is the compensation model different?
So in real estate in the US, and I assume in a lot of places, agents generally speaking get paid on commission. So it's commission, and so if you sell a property, you get paid. However, in real estate, like a lot of other independent contractor professions, the real estate agent doesn't make any money if he or she is not working. And for me, I was a real estate agent. I wanted to think about things long term for my family. What happens if something happens to me? And so we wanted to build a model that would have served me as a real estate agent had I wanted to continue to be in real estate. And that included things like becoming an owner in the organization that I was contributing to. In addition to that, earning income based on the agents that I attracted to the company because I was an active agent there. And those are pretty novel concepts in the real estate space, and as a result, a lot of agents are attracted to that because there is no retirement in that business. So that's how we did it. And because we're cloud-based, we're able to give our agents a higher percentage of the commissions generated than they would get at a traditional agency like a Remax or a Coldwell Banker. And so those are kind of the big names. Keller Williams is another big name in the US. But generally speaking, for them to operate, they have to take a larger percentage of the commissions in order to put those bricks and mortars in place and to pay the franchise fees and so on and so forth. So we're a national company. There's only a few national companies in the US. We are just one company operating in all of these states, and we're able to do that because of the cloud and the way that we collaborate and communicate. In fact, that's probably something. And
do the buyers of homes also profit from your model, or don't they?
Well, they get great service. So
okay.
So from that
no
perspective,
lower fees.
But no, we took the approach because there's a lot of people who who offer discounts in the real estate space, and generally speaking, they attract lower quality agents. So the consumer might save some money, but they may not get better service.
Okay.
And so we took the approach that we didn't want to give away the agents money until they had an opportunity to earn it. So if they want to discount or if they want to reduce their fees for a particular transaction, maybe it isn't a very difficult transaction, they have the opportunity to do that, but we as a company aren't institutionalizing those discounts.
Okay, so your agents win. Does anybody lose?
Not really. Other than, well, I'll tell you, who loses is the franchisors because our model doesn't have franchise fees going to a third party.
So that's where your agents used to work.
Right, and they used to have to pay 6-7% of their commissions off to another company that just provided a brand name, generally speaking. The traditional broker owner, now the broker owner is the person that put up the money for the bricks and mortar in those marketplaces. They are losing agents to companies that operate more cloud-based and this new millennial agent. So it's the agents that are up and coming that are mobile and they're the ones that are looking for this next generation brokerage. And so they're not as attractive to go to those old models where you used to have to go to the office and that's where you'd get the listings to go drive around the properties. Now you just do it with your phone in your pocket. So why should you have to go to the office to do that?
Okay. Now, Dave, you're with Can Capital. You supply loans to small businesses, right?
We provide access to capital for small business.
Okay, how's that different? And how is that disruptive?
We don't actually do loans. So we have,
tell me how it works.
So we have, our primary product is called a merchant cash advance. And what we do, we advance the merchant money and we're purchasing pre-discounted credit card receivables from them. So
okay, how is that disruptive then?
It's disruptive in that time to market from decisioning to funding is significantly quicker than the traditional lenders or traditional borrowers. Our products are non-securitized, so we're not looking for security. So we can decision and fund within the same day, whereas the traditional bricks and mortar banks take anywhere between 6 and 8 weeks to actually get the money.
You're not looking for security, you say?
We don't look for security.
Okay,
so we take a different view on the credit risk.
Yeah, that sounds revolutionary to me. It sounds risky as well.
Yeah, it can be risky, but our risk models are non-traditional. So we take into consideration FICO scores, but we also take into consideration things like cash flow, your social media presence, your social media activity, how people view your company, longevity,
so
a number of different factors.
some kind of background check?
Lots of background checks.
Where does the money come from?
We self-fund, so we're a balance sheet lender. So it's our money that we're lending out.
Right. And just a couple of minutes ago backstage, you told me you used to work in regular banking.
I did.
So how do you like the change so far?
It's different. Certainly the levels of bureaucracy that I was forced to go through in my many years of banking are non-existent. It takes some getting used to. I'm now in a situation where with a decent business case, I can go and talk to my boss and I can get funding for it based on a conversation, as opposed to a 40-page business case that goes through 7 different committees before I'm allowed to deploy technology.
Sounds like you like the present situation better.
Yeah, it has its pitfalls. It's fast-moving. I joined Can Capital with the goal of slowing down after many years in the finance industry, and the truth is I've never worked so hard.
Right. Who wins and who loses in your model?
Well, I'm hoping the banks lose.
That's what you hope?
Yeah, we believe that that's the case. So we're servicing an industry segment that the banks either don't want to service because of their appetite for risk, or can't service profitably. Yeah, and so we think the merchants win. In fact, we know the merchants win because they would not have access to capital if it weren't for Can Capital and companies like us.
Yes, there's another disruptive thing in finance, crowdfunding.
Yep.
Do you feel you're in competition with crowdfunding initiatives?
Absolutely, we are. Yeah. Crowdfunding companies like Lending Club and Prosper. They have a different financing model.
Yep.
The difference, though, is that they've not gone through a credit downturn. What happens when we go through a credit cycle, a downturn? Where is the funding going to come from then? Because typically people are going to withdraw from that market. We've actually gone through a downturn and survived and made money during that downturn as well. So we've been in the space for 18 years.
Now, there's a philosophical question I have for both of you. How do you know when you're disruptive? Is it that other people tell you you are? Or is there some kind of definition? Glenn, please?
Well, we've had some individuals that moved over to our firm, and the previous firm that they were associated with got cease and desist letters. They got cease and desist letters when they came over. So, one of the companies that we compete with directly is a company called Keller Williams, which is the largest real estate brokerage in the U.S. And we're now the fastest growing brokerage in the city that they were founded in. Mm-hmm. So their management team and other people are creating sound bites around our model so that they can keep some of their best and brightest from leaving and coming to our model. So we see that quite often take place, especially with that model, but some of the other models as well. We'll hear some of the things that they're saying about us, but it doesn't stop them from coming. It might slow them down. They may take a couple more weeks of sort of doing their due diligence, but once they sort of evaluate, where do I have the most upside long term if I'm going to be in this business for 10, 15, 20 years, it becomes a no-brainer for those who are more entrepreneurial mindseted. If they're just looking for a shingle and they're just going to do a few deals a year, they can hang their license anywhere. But if they actually are thinking about what is their business going to look like in 5 or 10 years, so that's where we get a lot of pushback from some of the mainstream brokerages.
Okay. And Dave, would you say you decide for yourself that you're disruptive, or is it the popular vote?
No, not at all. It's proof is in the pudding. It's based on revenue and profitability. Yeah. So we are. It took us. As I said, we've been operating 18 years. It took us 16 years to provide $2 billion of funding, and 2 years to provide
an additional $2
billion. And then the last 2 years, we provided $4 billion of funding. So we're taking market share.
Yeah. What's the role of software, Glenn, in your company? Is it crucial, or is it something on the side?
No, it's absolutely central. I mean, considering that there's no other way that we can collaborate or communicate
online.
But over online, there's software involved. So one of the things that people will notice about us first is we actually go to office as avatars. So we use sort of a Second Life type platform to actually have meetings. We've got boardrooms and presentation theaters and breakout spaces. We actually have all of our developers there from a Mendix perspective working in a virtual team room where they're sharing screens and they're collaborating. So we've really that's been a big part of it. And then the other piece is our business model is unique enough that we had to write that software or direct it to be written by others, and eventually we realized late last year that we needed to actually do this ourselves and actually become a software company.
Yeah. By the way, how important is that virtual space element? It has been tried before in Second Life and maybe other places as well. Can't you do without it and just have a chat room text-based?
You can't, like and Second Life really failed because there wasn't that one mission. It was just a social network, and sort of the idea of sort of running into people randomly in the bar is not really an exciting way to meet people. But coming to an event like this, where you have a common thing to collaborate around, does make a lot of sense. So for us, it makes all the sense in the world to actually collaborate that way. And it does feel like you're working together in real life, even though you're geographically distributed. In fact, I went so far as we don't have an office. I don't go to a physical office. I actually don't even have a house. So we've been actually traveling the country in the US in a motor coach up until a few weeks ago. We are now switching to Airbnb, but I would run the company.
The guy's in real estate and he has no house.
Yes,
that's great.
Hence the irony. Yes, but very ironic. But the idea of creating these virtual communities that are highly, you feel emotional connection to these spaces. Is a very disruptive element.
Have you been able to put a dollar figure on the benefits of that?
Well, there's some analytics in the back end of some of these platforms that will say if everybody had to travel from where their IP addresses are, you would have spent $250,000 on this meeting. So from that perspective.
But that's true if you went to video conferencing or WebEx and stuff like that.
Right, and so those are more transactional, meaning that you have to set up a scheduled time. Where our virtual offices are staffed, throughout the business day, so you can walk in and ask somebody a question, so the friction of collaboration and community is the same as it would be in a physical office. If they're there and you think they might know the answer, you just quickly ask them. You don't wait till somebody's off the phone that has the answer. So.
And did you try different ways? Did you try, for instance, video conferencing or text-based, or did you do it this way from the beginning?
Well, back in 1994, I started a company called Interactive Cafe, which was an online service, sort of similar to AOL. Actually, OpenText bought the platform that we used back then. And so we've used a number of different things over the years. I mean, Yahoo Instant Messenger used to be our sort of our way that we stay connected. And then Google Hangouts sort of is there, but and a lot of that works. And we use Slack. Slack's huge in our organization, but it doesn't. The avatars just takes that collaboration up one more level. The water cooler conversations that take place there don't take place over Slack or over Hangouts, and that piece is what creates the common knowledge of who this person is, what do they do on the weekends, what do you do, all those types of things that you really wouldn't do in these transactional level conversations. So we think that that's hugely important to building community and collaboration.
Okay, and Dave, what role has software for you?
So for us, it's a key enabler for efficiency, essentially. We've been operating for 18 years. There's a lot of practices and procedures that are manually driven. But if this business is truly scalable, both horizontally and vertically in terms of just the sheer number of transactions and the types of products we sell, software is going to be key, and it is key. We're trying to get, and remember, our value proposition is the ability to get money in the hands of merchants quickly. So the less manual, touch points, human touch points, the more efficient we're going to become.
Yeah, and you're both Mendix users, otherwise you wouldn't be here. How did you find out about Mendix?
Very good question. So like a lot of people in my position, I get bombarded with emails every day from people selling me rubbish, selling me stuff. And generally I have a tendency to just delete. And there was one that, for whatever reason, I didn't delete, and it was from Mendix. And I thought, wow, this is fascinating. And we started to dig into it, and we invited the salesman in, and we ended up doing business with them. So we tripped over them, is the truth.
And what software in your company was developed with Mendix?
So we had been struggling as an organization for 2 years to develop what we call a partner portal. And we have two business models, essentially. We sell through brokers, through business brokers, who market our products and services, and we sell direct. And the broker channel was very, very inefficient. It was paper-driven. So my predecessor had kicked off this project to deliver a partner portal. The idea was you can submit an application for a transaction on behalf of your customer, and you can track progress, and you can submit your documentation. And 2 years of work, and it never really got anything off the ground. And so I come in there after being wined and dined by Mendix and sort of blown over by them. We set a challenge, how quick? And they said, oh, yeah, we can do that in a month. And I'm like, yeah, okay. Right, so we invited them in, and sure as hell, they turned it around in a month. It was amazing. And I've got to say this, and I've said this a few times to people, is that in my long history in IT, it's the first piece of software that actually does what it says it's going to do on the can. Internally, we keep questioning each other. We've got this wrong. There's got to be something wrong with this thing. But no, everything that the salesman has said, it does. It actually does.
Yeah, crazy, crazy. Okay, and Glenn, your Mendix story, please.
Yeah, last year we've been doubling in size pretty much every year. So last year we went. Previous year we were at 400 and something. We were 600, 700. Getting toward the end of the year, we could see our ramp was increasing, and I started to panic over the fact that the stuff that we were using wasn't going to scale. And so I started to just dive in and looked at everything that I could find, and finally I ran into one app and learning about RAD and rapid application development, then looked at another platform, and then I saw Mendix, and then I built a travel agency, and then after that...
You built that yourself?
I did, yeah. So I went through through the tutorials. I mentioned to some of the tech team, hey, jump in there, start building this project. This looks like it could work, and they were very very junior in terms of coding, but they went through it and they got excited about it. And at that point, we went on a search for a Mendix developer just to answer whether this thing would actually work. We found a developer before we even talked to Mendix, and found a developer here in the Netherlands, and he started to work on on this, and he starts to do the domain modeling, and all of a sudden it's like, holy smokes, this thing looks really cool. And so we just sort of went all in, not knowing exactly, but if the marketing brochure was anything close to reality, we knew that this was the direction we needed to go. So that's how we kind of started down that path. And we only, I think, started in February.
Yeah. And are both of you going to develop more apps using Mendix?
So we're just in the process of extending this whole transaction management workflow platform. We started with our agent directory just to give all of our agents the ability to log in, put their photos in, and to put a basic bio, and to be able to search for agents. So it was hard for us to even find out who worked in the company, and that was. So I'm thinking, okay, start with a small project. We figured that'd be a good one, because I can't even find the agents that work for us in a nice interface type platform. So that was the start of it, and we've built onto it, and by probably in the next couple of months we'll have really an end-to-end transaction management workflow for our agents, from onboarding to so on. And
so it's a matter of expanding what you have more than building new apps.
Yeah, we may do something in mortgage. We have also a mortgage company that we just started, so we'll probably do that. But right now, if we could maybe pick up one more Mendix developer, we'd still keep them on the real estate side for a bit longer to get that finished out. And then once that's finished out, then we're going to start probably developing that next app.
Yeah. And how about you?
We are all in.
You're all in.
Yeah. In fact, one of the reasons why I'm here is to make sure that Mendix is more than two men and a dog that we typically, the sales guys that we see, we want to make sure that there's some depth to the company. So, we're all in. We're firmly committed. So we're going to use Mendix not only for our customer-facing activity and functionality, but also some internal processes. We're completely changing and transforming the way that this company does business. We're going to get to a point where a customer applies for a product, and we will decision in seconds, we will underwrite in minutes, and we will fund within an hour. And we believe that not only changes the fortunes of our company, but it actually changes the way our industry will operate, because it will set a new standard. And Mendix is an absolute key part to that.
Right. Now, Glenn, you're a CEO, founder and CEO. You're a CTO, Dave. Mm-hmm. Yep. Do CEOs and CTOs work together well enough? Are they on the same chessboard?
I would say in my previous lives, the answer would have been absolutely no.
No.
Big void
That's
between
big companies.
Yeah, big void between senior executives and the technology departments. In this organization, absolutely yes. My boss understands the value of what we're doing. He sees it. He's constantly testing. He's kicking the tires all the time. He's fully engaged. He really is. the traditional bureaucracy that I'm used to is totally gone because we built up an element of trust. We demonstrated that we can deliver cheaply, we can deliver quickly. So yeah, he's all in.
Okay. And Glenn, how about you? Your
Well,
opinion?
I'm kind of a CTO trapped in a CEO's body. So to some extent, I'm already sort of, from a technical standpoint.
Probably you're on the same wavelength, both of you.
Yeah, and Peter Noble came over from Microsoft. He's here somewhere, and he ran Scrum teams at Microsoft, and his wife is a real estate agent with us, and that's how he got connected. And so there was a nice synergy of really sort of having some understanding of our business, and it's been going really, really well. I mean, that relationship's been going on for a number of months, but now we formalized a couple months ago, and to some extent, I want to deploy faster than he does. So I'm really pushing for, let's get this out the door, let's kick the tires, let's find out where it's broken faster. So I think that maybe there's a little bit push-pull, whereas I think from coming from more of a Microsoft background, not releasing as quickly, going through a fairly bureaucratic way of releasing software. So I think there's still that sort of element of push-pull, but it's working out great, and I think it works well.
Yeah. Looking around in your industry, what's the biggest opportunity you see at this time, David?
For us, it's further disruption of the banking industry. The banks just are so slow to react. And moreover, they just cannot make money out of a $30,000 loan. And yet the demands for those products at that sort of level is massive. Sorry?
Is that a matter of overhead as far as
it's a matter of their cost. So they have one unique advantage which we don't, is their cost of funds is very, very low because of their depository base. That's something that I can't change. But everything else we can change and we can adapt quickly in terms of our cost structure and our pricing. But the banks they just cannot react quickly enough, and they're struggling to react to this explosion in alternative finance. And as more and more millennials start to move into the business world, they're quite comfortable transacting, traditional banking products online, and so they're more amenable to doing business with companies like ours. So we see the size of the pie growing dramatically.
And what new things are you going to do to make use of that opportunity?
So again, time to market is key for us.
Yeah.
So what we found is that people are less price sensitive if we can get the money in their hands very, very quickly. So they'll pay a premium for speed. And so we've kicked off an initiative that we call straight-through process. And as I said, we have certain targets that we're trying to achieve. And we think that that's going to draw in a tremendous amount of value. We're also developing additional products. And one of the value propositions for the Mendix platform is just cost of ownership and time to market. Yeah. So, test and learn, fail quick, all these cliches are actually quite applicable here. So we've got an ideas factory now that I can have a conversation with our marketing team and they want to get into some new fancy product. Historically, I would have said, give me 6 months. We can knock something out. Now it's out and do it in a week. Yeah, and if it doesn't work, that's okay. We throw that away and we start with something else. And it really is that agile.
Yeah. You say people are willing to pay premium for speed.
Yep.
Could you quantify that for me? How much premium are they willing to pay on $1,000, for instance?
Good question. We don't do $1,000 loans, so we,
we're
operating at the merchant level. But you know what? I don't know the answer to that. But they certainly, the fact that we exist, and we don't charge 3%. Yeah, but the fact that we exist, people are prepared to pay a premium for speed.
Okay. And Glenn, what new opportunities do you see?
Well, once we've started to make some headway in the real estate space. We're still very small on a relative scale. We actually think we've got the ingredients to be one of the top 5 real estate brokerages in the next 5 years. So, in terms of size in the U.S., but from that, mortgage is another piece, and so we've got a company we've launched called First Cloud Mortgage.
So you're hopping into finance now?
Well, not the same type of finance, but yes, on the to get a loan on a home, that's a big portion. And then the next part is the sort of the title and escrow, or the conveyance side of the business. And so, our real focus is to be able to do this, create collaboration and community without bricks and mortar, and use that as our as our leverage point, because the bricks and mortar is such a significant cost constraint in real estate. We did some math on it. 6% of the revenues of a brokerage firm go in the bricks and mortar. 6% go into franchise fees, and about 6% go into salaries. We've been able to disintermediate the bricks and mortar. We don't have franchise fees, and we've been able to run a company in 40 states with about 44 employees. So, our cost to operate is significantly lower, and all that has to do with this collaboration and community piece. So if we can translate to mortgage, we can translate to some of these other verticals, we think there's a lot of opportunity there.
We're hearing a lot about some recent trends like the Internet of Things, big data, machine learning. Are these at all relevant to you in your industry, Dave?
Absolutely. So machine-based learning, the ability to look at price arbitrage against some of our competition in real time, and to amend our pricing based on the consumption of data is something that we're actually looking at. Real-time decisioning based on our intraday changing risk profile. So rather than having a risk scoring methodology that's actually static, having one that can be amended in real time as the transactions flow through our engine. And so again, machine-based learning is something that we're really, really keen on. We have 18 years of data, something that a lot of our competitors don't have. And that we're now laying the foundations to try and use that in a machine-based type scenario.
And how about you, Glenn?
Well, machine-based learning is probably the one that's being used the most relative to predictive analytics, figuring out when somebody's going to move, when somebody's going to buy a home. Some of those are becoming more interesting in the real estate space. We don't really use too much at this point there, but for us, we think about all the things we can hook to for our real estate professionals. So, a lot of them come with, have their own customer relationship management or CRMs. They have their favorite apps. So the ability to connect to all these other apps, so maybe not things, but other apps that they might be using, and to be able to tie that into one platform, we think is powerful.
So, you've worked for large companies. What would you advise large companies to do when they face disruption?
I don't want to give advice because they're my competition. Continue doing what you're doing now, please. You know what?
Suppose your organization grows, and in 10 years' time you face disruption yourself.
You got to work through bureaucracy. You've got to take the latency that's inherent in large organizations out. And so for me, if I was back in the banking industry or working for a large corporation, I would ring fence an organization to try and react to companies like ours. I would actually, skunk works, I think is the vogue term, set them up in a little room and go knock stuff out and keep them away from the general bureaucracy of the organization.
Yeah, like a little incubator.
Absolutely.
Inside. Yeah. Is that a sound advice, Glenn?
Well, we are sort of operating from that premise already. So we're a fairly small organization. We've got a very small development team. We are looking at how do we sort of continue to evolve in that space. From looking at the large organizations, when I got in the business, we started to go down this path. We said people are going to copy you. People are going to copy you. This Remax is going to do this. Keller Williams is going to do that. None of them done squat. We basically been running unopposed in our space since we launched, and the more we get into it, the less likely it is that they're actually going to make a move. We're just continuing to sort of pick up our market share, and because it would take a fundamental shift in their business model, and even if they decided to build something separate, they would be cannibalizing their own business that exists already. So they're kind of stuck. So that's right now. I think that's really kind of where we're at.
Okay, let's see if there's questions for you. I have a microphone here. Who wants to ask questions to either of the gentlemen here? I tend to be bothered by the light a bit. No hands? You got to be kidding me. People are pointing. Is that you? You? Oh, people tell me there's a hand there, but it's a smartphone. No questions, people? There's one. I knew it. Please tell us who you are. And stand up, please, for the camera.
My name is Pieter van Bezouw, and I have a question to the Mr. who is giving the money to the small business people.
That's Dave Dart there.
Dave, yeah. How come this isn't more happening more often? It's so obvious in a way.
It is happening more often. So
You're not the only one.
We're not the only one. The alternative funding space is exploded in the United States.
Not in our country, I have the impression.
In the United States, it's massive.
Okay.
We were the only game in town for a long, long time. In fact, we were pioneers, certainly of the product that we sell. Now we're not the largest. There are companies that have actually gone public. Lending Club and On Deck are both companies that do operate in this space that are actually the IPO. They're larger than ours. Yeah. We do make money, they don't. But the space in it, the space is very large. In the US, there must be 30 plus companies that compete with us.
Okay, thank you.
Thank you. Who else? There's one all the way over there. Please tell us who you are and ask your question. Thank you.
Hi, Dave. And to the other name, I wasn't here when it got introduced.
Glenn.
So banking is an old school industry, and so is academia. And I come from academia. I'm at UCLA, and we're going to introduce this concept of change in their environment as well. So I was wondering, you said there was blowback from the banks when crowdsourcing and all this alternative funding started coming out. Can you give us some examples of the negativity you might have experienced when you chose to break away and introduce this new way of doing things?
Well, I wasn't there when our company started, so I'm a recent convert to the alternative funding space. I don't know there was so much blowback. I just think the banks do not know how to react. I think they cannot react quickly enough, and they're struggling for many reasons. Some of which, as Glenn mentioned, we have the same advantage in that we don't have the bricks and mortar cost associated with branch banking, for example, and they just cannot react quickly enough. So I don't know. There's some blowback. I do see that they see us and companies like us as a threat and an increasing threat as we grab market share. And what you see happening in the industry is a certain group of banks are out there partnering with companies like us. So I think Chase done a deal with someone recently. So that's how they're reacting. They're either going to partner, but I foresee further disruption in this market. I really do.
One or two more questions, if there are any. Oh, whoa. There you go.
Hi, my name is Wesley van Wijngaarden. I have another question for Dave. Sorry. I heard you say that you are primarily focusing for merchants at this moment. Do you see your market expanding to SMEs or maybe even up to the enterprise going forward?
No, that's not. I don't believe that's a space that we as a company can operate and be successful in. Now we're a really niche market. Yeah. I believe that some of the other players may go up that ladder, but you can imagine it's the risk management associated with lending millions of dollars is very different than the risk profile and the risk metrics associated with lending $30,000. Yeah.
Okay, who has a question for Glenn then? Yeah. You'll have your turn as the last one.
Hello, my name is Rick Stam. I was fascinated, Glenn, that you mentioned that you don't have physical office spaces.
Correct.
And everything happens in the virtual world. I was wondering then, how do you facilitate innovation? Because as I look at our company, most things sometimes happen when you just sit with a few people in a room with a pack of Post-its.
Well, we actually have that room. It just happens to be 3D virtual that we actually have sitting on our desktop, and we have the ability to literally collaborate in real time in that virtual environment. So we can pull up sort of brainstorming boards. We can start to build out our backlogs for our Scrum. We can build our user stories. We can take graphics that we've just jotted in our computers and throw them up on the wall. So we've got sort of that ability to do that.
Yeah.
And we do sit there in a room throughout the day. Like if we look at sort of the development team, they literally are together with their headsets on, sharing screens throughout the day, even though they're geographically dispersed.
But don't you then sometimes miss like the energy or the synergy? What happens when people really come together?
There's a lot of energy and synergy. You have to actually experience it before you actually kind of get it. But once you start to use it, you very quickly you start to go, yeah, the value of driving for an hour, not so valuable.
Understand. All right, thank you.
Okay, and the last question now, I believe it's also for Glenn, and this must be Hans de Visser.
Thank you. I was
Mendix.
fascinated by your story, Glenn, and the way how you disrupted real estate space. Here in the Netherlands, you got the Remax gang coming in just before the property crisis hit us. Are they kind of striking back to your disruptive model, or how do you see the competition evolving from the once at a time disruptors of the market?
Yeah, so there's different models. Remax in the 80s was kind of the big up and coming model in the States. In the 90s and into 2000s, it's been this company called Keller Williams, and we are I think taking on that same mantra or mantle of being the disruptor in the space. So one gentleman that says they've got their models. They're not going to change. It's really the next iteration of innovators that start in garages and virtual boardrooms that will come up with the next model. So that's and we're celebrating that at the same time.
Ladies and gentlemen, Glenn Sanford, eXp Realty, Dave Dart, Can Capital.